Is the Santa Claus rally in sight? Let's ask Mike Mussio of FBB Capital Partners, and I'm Lisa Bernhard with Reuters. Mike, first give us a refresher course on what the Santa Claus rally is and what do we tend to see in those gains?
Sure. So the Santa Claus Rally is a rally up from the very end of the calendar year. So starting, today, tomorrow, in through the end of the current calendar year and into the first few days of the new calendar year. So we're looking here over the next week or so, week and a half. Remember, it's two kind of full weeks, but it's not two full weeks of trading because we have a couple holidays in there. We have a half a day of trading tomorrow. Um, I think one of the causes of this every year is let's go with some general optimism for a new year and new resolutions, prosperous new year for everybody. At the same time, there's probably a little bit of window dressing happening on the ends of the calendar year where people are positioning their portfolios to own a little bit more of some things, a little bit less of others. And if that window dressing is leading you into big cap stocks, then that are weighted a little bit more in the indices, you'd expect to see a little bit of a pop.
At least two things that we know going into 2025. One is that the Fed has signaled that there will be just two 25 basis point rate cuts, most likely, keeping borrowing costs high. And the second thing is that the chaos that we saw before the government finally passed a stopgap measure to keep the lights on could be revisited again in mid-March when that expires. So, given those, how do you suggest investors prepare, recalibrate? What do you think?
Well, preparing, I think the higher rates are giving investors a little bit longer. We're kind of in extra innings here in terms of being able to allocate resources that should be in fixed income back into fixed income. So rates being higher gives you an opportunity to invest in an asset class that has lower prices, higher returns than it has over the last 15, 16 years. That's a good thing. We're also doing that on the heels of an up, mid 20% year in stock markets. So selling more expensive assets, buying cheaper assets. That's a great time. It's the end of the year. So capital gains capital gains will reset as we go into January for tax purposes. So rebalancing is a great idea. The Federal Reserve is saying that inflation maybe isn't as licked as we thought it was, thereby only a couple of rate decreases from here. And I think that's going to be really interesting as it plays into the same timeline here, those first couple meetings of 2025, as when the new stopgap measure to keep the government open also expires in mid-March. And so we're going to have a couple meetings from Federal Reserve. It's going to be interesting to see if Republicans can get along with Republicans, let alone with Democrats, to come up with something like that has a little bit more longevity than every 2 weeks or every 2 months. And at the same time, the debt ceiling that President-elect Trump was trying to kind of sneak in there to give us a couple years of breathing room, that didn't get through. So we're scheduled to hit that sometime in that March, April timeframe. So it could be a very short-lived honeymoon. There's some fiscal stuff that has to happen. Wouldn't be surprising if President Trump gets frustrated at the same time with monetary policy not being as easy as he likes. He's a real estate developer. Real estate guys like low interest rates, and it will be very interesting to see how that plays out in the first quarter.
Let's switch to some economic data because, against the backdrop of a strong economy, we did see that the Conference Board's consumer confidence survey today dropped in December. That's the first time in, I think, about 3 months or so, amid fears of inflation, ticking up again, which we've been talking about, and perhaps even worsening under potential Trump tariffs. So how does that translate into consumer behavior? Do you think that we'll see a pullback, for instance, in retail spending, which has been very strong?
I would be surprised, like if you're a consumer and the message you've gotten over the last couple of weeks are tariffs, on goods, and then inflation on everything from goods and services. You as a consumer myself, you get a little, where am I going to spend the next, dollar? And the backdrop coming into this has been retail sales has been very strong, and so it would not surprise me that given all of that, that the consumers and just the economy in general right now is pulling forward some 2025 growth. right, or some 2025 sales. So it's probably going to be a very strong, holiday season in terms of spending. I expect businesses to be planning for tariffs, and maybe we'll find this out right around the time the inauguration occurs, as companies start to report. They may be stocking, pulling some inventory purchasing ahead of potential tariffs. That stuff runs through. That's kind of pushing Q4 GDP, which is still up tracking above 3% right now, very strong. But is that pulling a half a point or three-quarters of a point from the first quarter and or second quarter of 2025? We will see, but it wouldn't be surprising. People are well, you'd rather buy something today if you think it's going to be 5% or 10% more expensive tomorrow.